Our next guest sees cracks in this summer rally. Julian Emanuel is the Senior Managing Director at Evercore ISI. Julian, always good to see you. You just recently raised your price target, right, on the S&P 500 to basically a little bit below where we are right now. So what kind of cracks are you seeing?
Well, look, and again, Guy alluded to this. This market has squeezed a lot of people. And frankly, in a momentum market like this, and we have to acknowledge, this is actually one of the greatest momentum markets of our lifetime. The NASDAQ has annualized at 100% since the bank crisis bottom in March. So from our point of view, look, this is very much about the fact that the market's bifurcating into fear and greed, okay? Greed, we know. Actually, when we think about it, the technology names that have run as far as they have been are sort of in the throes of rational exuberance, okay? Rational exuberance meaning that when you look out, particularly into 24 and 25, the spend is going to be there for AI. Corporates have told us as much, but you still got to get from here to there, and these stocks have moved, whereas other areas like energy, healthcare, have really been more beset by fear until recently. Now energy has started to rally. China has started to rally. And the incredible thing about this market is that once price momentum starts moving, it takes on a life of its own. So we want to sort of be cognizant of that coming into August and September. Why does the market go down every September? It's really kind of hard to say. It's perhaps as much a mood thing as anything else. And I would only point out this, is that we should be careful what we wish for. If we don't want or don't think the market goes down in September, the last 2 years where the market didn't go down in September, 2018, where you had a massive bear market in the fourth quarter, and 2007, I don't need to tell you what happened those next 2 years.
So to position yourself for that crack that you think is going to happen sometime in the next few months, do you want to be in the fear part of the market or in the greed part of the market? So
we actually want to be in both, because you have to differentiate between the short and the long term here. The part where there's been fear, we do think there's a very viable long-term thesis, particularly in energy and in healthcare. But at the same time, we do like those, call it, quote unquote, AI type names. But you need to hedge. The perfect example, the summer of 1999, the NASDAQ fell 14%, and the stock that is the highest market cap stock in 2023 fell 29% to a split adjusted price of 51.3 cents. And it's 190 something now. That's why you have to figure out how to be a long-term holder when there's going to be volatility.
You're recommending using the Qs as a hedge, right? I mean, because basically, when you're betting on AI, you're betting on the NASDAQ.
Absolutely. And lo and behold, Chair Powell has given us an opportunity to hedge, because the higher interest rates move, the more attractive selling calls against your position becomes, and the more attractive it is to finance downside puts. And that's what looks interesting to us, particularly into October, which again has the seasonals. And we're not even saying you need to decline. If this position were static, you would just need to annualize, call it below 30%, to not lose money on that kind of hedge.
At the beginning of the year, you started out, or towards the beginning of the year, you started with the price target on the S&P that was 41 and
41.50.
41.50. Yep. We're talking about the pain trade higher. What do you think you missed about the moves that we've seen year to date?
It was, Bruce Springsteen. We were waiting for the moment that just don't come. And that was the recession.
It's nice work, by the way.
Well,
Badlands.
We talked about Led Zeppelin in the green room.
That's what we do here. But you really came to the table with something big there.
Well, nice. So look, and frankly, again, this is one of these things. What we underestimated was the fact that money supply increased so profoundly in 2020, 2021, and the Fed was still buying bonds in the first half of 2022, that all of this tightening that we've had has not been enough to counteract it. There's still a pandemic stimulus savings pool there. The labor market's good. You don't have a recession with those conditions.
So walk me through when you raised your price target to 44 and change, finally, what was sort of the worry that went through your head about I don't want to say throwing in the towel because it is still downside from where we are currently, but about boosting your outlook?
No, the worry was that valuation might have been too extreme. But what we found is something that we found in the 90s, that you can actually still make money in the stock market with interest rates at 5 or 6%.
Right. Julian, it's always great to speak with you. Thank you.
Thank you.
Julian Emanuel, Evercore ISI. What are you laughing at?
No, because he's dropping Bruce. I mean, it's fantastic. You're just like, la, 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 la.
I don't know
Badlands,
these
by the way,
things.
top 10 Bruce song. I mean, I don't know where Tim comes
Top
down. on
10,
this.
top 3. Yeah, I mean, look, Born in the USA, we can put at the bottom of the list. So let's just do that, right? I think it's what we wanted. Isn't that what we wanted to establish here?
Mel is so done with us right now.
I don't even know. It's the A block.